Good morning, everybody. Today is Monday, March 18, 7:30 a.m. Eastern Time. So let's review what they left in the book on Friday and compare what we have in the pre-market. So we have like a bearish pattern in the dark pool. So DIX drop again to 44%. So a 2% drop, and this start to accelerate the market. Of course, that's totally normal because the current flow, the preview flow expired in the quad week, expired on Friday, and a new flow start to appear in the book. Okay, they start to build another flow in the book. So you guys knew that dealers in general was long gamma up to quad week, and in the quad week on Friday they decide to be like short gamma at 5,155 and short gamma at 5,140 in the afternoon, right? uh, Anyway, so at the close, the volatility skew just print a bullish smirk. So that's the only divergence that we have in the structure. But also I like to highlight to you guys that since December, as soon as you see a drop in liquidity, a drop in DIX, usually you will see in the day after a green day, right? You guys already know that this is the new pattern since December. Okay, since December. What you have in the delta flow? They left delta flow on Friday. Okay, they suggest us a rejection at 5,130, 5,135. The region is where the EMA 8 daily graph supposed to be is located, right? I also highlighted in the market chart. So let me get the volatility. The volatility still didn't change too much. It's pre-market, so it's still the same, but it's a little bit higher, no? The amplitude, is much higher than before. So calls has much higher implied volatility now. So on Friday was print like 14% above 5,120, and now it's print like 58%. So it's totally normal, and the market drop is totally correct because they accelerate the market. You guys tend to see volatility. Volatility tends to spike. And March 20 is the VIX expiration, if I'm not wrong. So it's totally normal to see a spike in volatility, at least before the VIX expiration, because dealers have been suppressing volatility to make the market calm, right? This is a pattern since 2019. You guys know that. Who is suppressing volatility? I don't know, but everybody's talking that is this US central bank. So it's totally normal to see spike in volatility, to spike implied volatility, to bring premium to options contracts, and consequently, suppress volatility in the VIX expiration in the higher level, not in the lower level. So you guys saw the spike in implied volatility, but same scenario, bullish smirk. So delta flow. So delta flow is overall negative, bearish, suggesting as a rejection between 30 and 35. Okay, squeeze above 5,160. That's what left in the book yesterday. But let's check first the delta flow in pre-market. Let me bring the spreadsheet to the screen. Delta flow is still negative. So now, 5,125 spike. There's a spike in negative delta flow. But now, instead of 5,130, 5,135, we need to look a rejection at 5,150. Also, why? Let's check gamma. What we had on Friday? The minus GX, the minus GX left on Friday was located in 5,155. Remember that at the open on Friday, dealers were short gamma at 5,155, 5,150, and in the after at 5,140. So the deltas is already changed a lot, the delta flow, and also the gamma structure. Observe that between 5,120 and 5,130 is a no gamma region. Okay, is a no gamma region. Okay, and between 5,115 and 5,120 is a no volatility region according to the volatility skill curve. Okay, but look the difference. Before 5,150 was a negative GX, not negative gamma exposure. Now became the plus GX. Also, a lot of people, is buying 5,150 calls to be exposure for the upside. That's totally normal. We came, from a big drop, a big sell-off on Quadro. A lot of, and I also highlighted this in the market wrap. A lot of, people start to short. So Friday wasn't a day to be short. Friday was a day, to be long, right? Because I expected a bounce on Monday, and I expect, a bounce up to 5,145. Remember, I bought 5,050 calls, expected to sell to $95. But since, we reject 5,120, I closed the call with input profits in my pocket. But you guys knew that I was expecting a bouncing on Monday, right? I expected a bouncing on Monday. So, but now, since we will open, let's see how future it is. Future suggestion is a 35 gap up. So we will open at 50, 11, 50, 51, 5,151. So we will open a positive gamma territory, like we will open above 5,150, and 5,150 is the plus GX. So what's the pattern? In a positive gamma intraday, right? Because you start to be in a positive gamma intraday vision. So sell strength by weakness, right? So since we don't have any gamma over here between 5,120 and 5,130, and the strength is 5,150, I don't disregard to see, a pump and dump. A pump and dump. And where will be the weakness? The weakness you start at 5,115. But what I told you guys also in the closed group, I expected markets, back test 5,145. So far, futures telling me that you go to up 51, and I expected to see market close around 5,125. That's what, the structure suggests me on Friday. Let me open the WhatsApp. Let's wait for the WhatsApp synchronize to open my last message. So that was, you know, my last message, 7:31 a.m. But it wasn't today. Anyway, but it was in the during the weekend, and that's one that I wanna focus, right? That's one that I wanna focus. So I highlighted, you know, the where, you know, dealers was short gamma, and I expected, you know, a limited upside, 35.45, and markets closing, you know, around 5,125, 2025. So that's, you know, the message that I highlighted, what, you know, the structure suggests to me. I squeeze, not a squeeze, you know, but clean it up, you know, the book, how can I say? Collect, you know, all the premium, especially, you know, the later bears, the later short sellers. So to clean it up the book and bring, you know, I was looking for 45, but looks like that the future wants us to go above 45, so at least above 50. And I was looking for a start, you know, to see a dump and close around 5,125 and close around 2025. That's I said over here. That I was looking for, you know, according to the structure that they left on Friday. But future so far is showing strength. It shows that we will open above 5,150. If you not see a sell pressure, okay, so 5,150 tends to be the support. Anyway, if you start to see a downtrend before the open and you open below 5,150, so consider 5,150 as a gamma resistance, a inflection point, okay, inflection point, and maximum upside target 5,160. Didn't change too much about the squeeze setup, because I also highlighted, you know, in the WhatsApp that the squeeze starts above where 5,160. Upside target for squeeze XPX need to be traded above 5,160. So that's, you know, the Friday gamma structure suggests to us. Okay, so if you open now above 5,150, that's the inflection point for the upside. So expect a squeeze if you will break 5,160. Gotcha? So between 5,120 and 5,135 is a no gamma region. And if they wanna open with a gap up and start to sell, since we will open in a positive gamma territory, so buyers supposed to be located at 5,150. That's where we start to see negative gamma and then bring market back above 5,125. This is what, you know, the structure show us Friday, right? A possibility for pump and dump. Okay, so weakness per delta 5,120, 5,125, 5,135. Weakness for delta. Strength for delta above 5,150. Positive gamma territory, sell strength, buy weakness. Okay, buy weakness. 5,140 positive gamma. So if they wanna sell, you could be breakdown, and then you guys need to start for all those negative delta flows located in 5,135, 30, 25, and worst case scenario 5,115. So you guys realize that delta flow is still bearish. We open in the plus GX region, where was dealers was short gamma on quad witch. Okay, let's go back to the market web. So we already reviewed the delta flow, we already reviewed the gamma. So I also highlight to you guys that I don't expect the break at 5,100 and 5,105 because it's really crowded over here, especially from puts. It's really crowded. And open above 5,150, as I told you guys before, right now, you know, that is a cleanup book, because look at how crowded as well. input contracts. So this melt up, in my humble opinion, and I also highlight to you guys, is a clean up in the book, because the amount of open intelligence input contracts that we have. So the idea is to burn out those premiums, and consequently, you know, they change the implied volatility, the volatility skill, because if they want to sink the market in some point this week, right, they need to buy cheaper puts. To buy cheaper puts, they need, you know, to make a trap. They needed to bring implied volatility highs in call contracts to sell premium to finance themselves to buy hedge using the market money. Okay, using the market money. So according to the Delta 1 order that's printing, so since we closed at 5,170, it was difficult to provide a bullish, you know, a bullish analysis, because per what they left on Friday, you know, I expect a reject with 35 and 45, but it looks like that somebody, a Plum protection team, bought that call in the money, because so far is up $37, not $37, sorry, $27, right? It's already up $27. Okay, so somebody at the close, you know, save the market for today, you know, and clean it up, all those open contracts in the put side. Okay, let's talk about, I also highlighted over here the SPX, you know. Look at the volume from the quad each. Look at the volume over here when they bought. Okay, so per the volume, using like volume profile, dealers, you know, that bought, dealers or CTAs or even retail that bought over here, they are willing to sell in the quad each. Look, you know, how the volume, you know, was much lower than compared with those 2 days. And also was a big profitable, you know, profitable rally. A very profitable rally. A big profit. So my concern right now, I'm not bullish anymore. And also I'm not saying that the market is not going up anymore. Right? Because we are in the distribution. They could rotate, you know, between small caps, Dow Jones, techs. They keep, you know, rotating. You know, what's happening today to bring the markets up? The CPI in Europe. Remember that I told you guys that we will not see any downtrend, you know, since we are seeing higher CPI. Because the market in general doesn't want to see a cut. Markets really want to see CPI higher. You know, everybody knows that, you know, the CPI is not like a health inflation. That's an inflation built by design by central banks, because they have been printing money, they have been injecting the system with liquidity. Forget QT. I already provide you guys, you know, all the notes, you know, all the explanation about, you know, the Federal Reserve FONC meeting notes, what they have been doing. They are not removing liquidity so far from the systems. They keep adding, but in a different way. Okay? In a different way. Okay. Anyway, since you already reviewed the volume profile, also highlighted over here, I don't know if I put the DXY. The DXY, let's see if it be confirmed, you know, because the DXY and also the TNX suggests us that, you know, they left, you know, basically, they start to create a pivot. Of course, to validate that, if you is a weekly graph, to validate that, we need to see the DXY closing above 103,494, especially closing above the inflection point at 103,661. That's, the light blue line. If you see the XY closing above the inflection point, tend to validate the pivot that's supposed to be formed last week. And then, with a very squeeze bullion band, I'm telling if, because I don't know what Federal Reserve will do. If we close above 103,661, with a very squeezed bullion band, dollar tends to spike at least to backtest this trend line at 111,251. Same thing about TNX, the 10 years yield. I told you guys that I'm not bullish anymore in bonds anymore, because the TNX start to getting in trend again. Start to getting trend again. We have a resistance at 4.3, and we have an inflection point at 4.5. Also, look at the bullion band weekly graph, really squeeze it. If this will be a pivot, and if this week we close above 4.3, this also tend to spike at least backtest again 93 bottom at 5.19. What this means, we will move from a risk on to a risk off. Okay, so that's the two variables that we need to looking for this week: 10 years yield and DXY. Regarding Bitcoin daily graph, bullion band is really squeezed. It's trading below EMA 8. EMA 8 is located at 68,605. So far, EMA 8 is acting as a resistance. If you not see a break this week at the EMA 8, Bitcoin start to show us a weakness. Pay attention that Bitcoin so far backtest a not very important pivot, is a weekly pivot that was located at 64.66. Let me just get the coordinates. A pivot located at 64,899. That's what dashed line. They backtest this pivot, okay, and went back up. So you guys realize that 64,899, that's a very important pivot. So, but in another hand, the EMA 8 now became a very strong resistance. If this week you keep seeing Bitcoin rejecting EMA 8 and close below EMA 20, that is located at 55,000, the next support, important support, will be 58,800. But look, what we have at 58,800. The lower line of the bullion band, we have the EMA 50, right? So because that, it's a very, very strong region. If you see a downtrend over here and a bounce, a pullback, so we need to look for 64,899 as a resistance. And if you see a rejection over here, so these assets will prepare a huge pullback. Okay, so if you see Bitcoin back test 5,800, bounce and reject 64,899, again, if, because I don't know, expect a huge pullback that could bring Bitcoin back to 45K, test the EMA 200, and the major support at 45,649. Of course, before 45,000, we have 5784 and 5294, not 944. But Fabio, why you talk about 45,000? Let's look the weekly graph. Look how the Bollinger Band is really wide open. And pay attention that Bitcoin break the upper line of the Bollinger Band and now is rejecting the upper line of the Bollinger Band, but so far using the EMA3 as a support. So what is 45K? 45K is the middle line of the Bollinger Band and the EMA20. So it's totally normal to see a pullback up to that region, to see, the Bollinger Band start to close again for a new highs or for a new lows. That's, graphical pattern. Because that, I'm telling you guys that pay attention 45K. And remember the real return calculation that I told you guys before. Even if you see a pullback up to 45K, Bitcoin is still profitable. Because the real return for those that bought Bitcoin at the top, pre-COVID at 29K, applying the current real rates plus inflation, Bitcoin, if it's trading at 45K, is profitable. The real return is still profitable. Of course, at 73, Bitcoin was profitable 55%. So if you see a drop at 45%, Bitcoin is following the inflation. And also follow the raising rates as well. So that's not something to get worried if you see a pullback up to 45K. It's still profitable. Okay, it's still profitable. I'm not telling you that you will go there. I'm just showing you guys a graph pattern. And if you check, the indicators in the daily graph, because, assets start to revert in intraday, daily, weekly, monthly, quarterly, 6 month, annual, and that's it. That's, the way that, assets start to revert the tendency. So we start to see, divergence, bearish diversion in Bitcoin, especially in MACD, right? And look, the tricks look the ADX and the DMIs that, start to squeeze. The ADX start to pointing south. So Bitcoin in the daily graph start to show us a bearish divergence. Tricks, is not, tricks don't have more, a bullish angle. Start to build a line and is in a process to build a negative angle to point south. Okay? So, per indicators, Bitcoin and the rejection of the EMA8, Bitcoin is looking for a pullback. Okay? And it's normal. Totally normal. Okay? Guys, we already reviewed the DXY, we already reviewed the TNX. So we saw that, the structure is totally different than what they left on Friday. The gamma design. The delta flow is still bearish. So Friday, Friday suggests a squeeze if you break 5,160. So delta flow now showing us a possibility rejecting at 5,160. This melt up and suggesting to open above 5,150 will clean it up, all the put contracts at 5,150 and 5,155 highlighted over here and also highlighted in the market wrap. Okay, and also highlighted in the market wrap. So if you see also a pump and dump, is totally normal, but now I don't expect it, maybe below 5,135. But per gamma design, weakness only at 5,115. And between 5,120 and 5,140 is a no gamma exposure. We have like zero gamma so far in the pre-market. And per the order that they left on Friday, maybe 5,130 will be the floor. Okay, maybe 5,130 will be the floor for today. Don't disregard a pump and dump, and also don't disregard 5,130 will be the floor for today. Also, 5,130 is the EMA 8 is located. Remember that I was looking for a rejection at 5,135, maximum 45. Now, per that's delta 1 order and this melt up looks like a cleanup in the book, especially for those that are holding puts, and market closing floor at the EMA 8 at 5,130. Guys, look how different is the pattern this week. Remember that we are in the beginning of the change, not the change, to build a new flow. What we have been seeing since December, market have been open Monday, Tuesday, up to Wednesdays, very weak. And then you have been seeing bounces, strong bounces, Thursday and Friday. That's, a good pattern for a bull market, for an uptrend. Why? Because dealers buy cheaper and sell high. So, since December, these have been the pattern. Weakness at the open, and the open of the week, and straight at the close of the week. Now we see the opposite. Now we see strong market at the open, the weekend open. Maybe we will see a weakness at the end of the week. Usually, reversal of the trend is like this. Strength in the beginning of the week and weakness at the close of the week. Sell high, buy low. Guys, take care. Enjoy the day. Pay attention to the level. Just highlighted. 5,160 now tend to be the maximum upside target and a rejection area. 5,150 is the plus GX. Breaking down 5,150, floor tend to be 5,130. Take care.